Let's also welcome on board Gopal Srinivasan, Chairman and MD at TVS Capital Funds. Gopal, hi, good morning, and what a great morning this is turning out to be. 13,000, who would have thought? And just given the kind of FI inflows that we've seen, Gopal, month to date, that's giving you conviction that the market has more legs to go. What makes India attractive, Gopal, right now?
Of course, I'm going to have to come at it completely from a private equity perspective. So I'm going to stay away from the momentum and the excitement that there is around that. The NSE Bank this morning is nearly within 10% of its all-time high, as you might have also added to your 13,000 observation. And we do a lot of investing in banks. I think the fact that India has weathered the most difficult challenge of the economic crisis created by the management of the COVID pandemic, in a very simple way of expressing, I think is exceptional. I think so many countries have struggled in so many different ways to surmount this greatest of challenge. And I think India has done a very creditable job. And I say India, I don't mean government of India alone. I just mean the people of India, whether it is small business, mid-sized business, whether it's large businesses with the transformation, whether it's RBI with its exceptionally astute policies on liquidity, and whether it's a government on public health. It's been an all-round good experience. And I think that's what makes an emerging giant like India more attractive now, because it has not been damaged and it is actually coming back with more resilience than one could imagine. At a very macro level, that's what I would imagine. And the FIIs, as you correctly pointed out, are coming in the month of October and November far more aggressively compared to the domestic market investors even, which shows that compared to the rest of the world, and I take that as a comparator, they find India that much more attractive. So I think that's the reason in my mind at a very macro level, speaking macro.
Talk about investments now, Gopal. You know, the world has turned digital in the post-COVID era. Where within now this phase do you see the big trends or disruption emerging?
I think what we have really seen is that in the businesses we invest in, which is largely, if you look at it in the B2B services and financial services industry, the digital was always a potential that India had, right? The fact that we had this massive internet infrastructure was something we never really knew till it was tested and stress tested during the time of COVID. So the fact that we have had these capabilities for the last few years in internet bandwidth and the last 20 years in terms of digital transformation is something that has just come to the fore during these particular times. What we have seen is something really very, very quite simple. And that is, I would simplify it to a very basic idea. Companies that we invested in that were well managed actually produced dramatic transformations inside their business in the last 9 months. And companies that were not sort of tried but couldn't do it as successfully. As is always the case, whether it is transforming digitally or whether it's transforming to become participate in global markets or any other kind of transformation. So I think I would just go back to basics. Companies that are well managed will use digital far better in terms of improving their operational efficiency, in terms of using data as well as they can. And I think the main thing I really look at is the fact that today it's available freely. There was a time 10 years ago or 15 years ago when to access the power of digital, one had to be large. One had to be willing to take a lot of kind of blind faith type of large upfront investments and kind of hope that this transformation would work. Where digital was siloed through the entire, in the organization, the entire organization looked at it as some kind of temple that one had to go with slippers removed. From that time in early 2000s to now, digital is democratized. All the employees in the company in their personal lives use digital very extensively, starting with the fact that there is expected to be 1 billion payments per day in the near future, as per the NPCI chairman's speech last week. And the access to digital products are through SaaS and through the massive integrations that you're seeing through APIs are able to be easily accessed by any small to mid-sized business. And that, I think, is a real transformation. In the past, you could be a transformed island in the middle of an undigital world. Today, your suppliers, your customers, your even small suppliers have adopted digital in some form or fashion. I'm speaking to you from Chennai, home of SaaS, Zoho, Fresh. These are just two simple names where thousands and tens of thousands of small and medium businesses today are being digitized thanks to this democratized availability. So I see the big story this time, not that digital is powerful, which we all knew always, but the fact that it's widespread. And therefore, through connectivity that is happening through the APIs, you will actually see far more interconnect than ever before. And that, I think, is a big story. The whole system transforming, the entire forest changing, rather than some giant trees in its midst.
Right. Gopal, while we are focusing on companies which would benefit, which will gain, which will transform, somebody is going to be losing market share. It is not that the size of the pie is growing exponentially. It's a phenomenon where adaptation and digital technology is coming at a cost of some other businesses. So where do you think opaqueness, where do you think redundancy, where do you think the slack would kick in?
It's a great question. And I think the answer is, unfortunately, for the next few years, it's going to be related to size. I think larger businesses, organized businesses are going to gain dramatically in the short term at the cost of smaller businesses. Does it mean small business will ever go away? I don't know. I think they will adapt. But I think that is definitely where the win-loss score is being kept, Ayesha. I think fundamentally whether the smaller businesses can cope. So the fragmentation will reduce. We see it everywhere. We see that players are consolidating and larger players are going to sustain for the short term. And what better example than what we read about every day in the e-com world, right? All the news of the e-com world tells us exactly that. That is the truth.
Gopal,
the smallest example you could take is look at what happened
right.
in the food business.
Fair
right?
point.
All the food businesses, only the organized restaurants, restaurant chains have gained, and not the individual eateries.
Fair point. That's a great point. I distinctly remember last time when we met, we spoke about logistics. And you said, look, exciting things are happening there because of technology and because of convenience. So whether it is eating at home or ordering something online, where do you think there is going to be, is there merit in looking at that space? Because that's one space which has got a lot of levers now. On the demand side is, on the demand side there is need. On the adaptation side, there is digital technology.
I think logistics was one of those moments in India, right, which is always saying it has great potential for the future. And you would go to seminar after seminar where everybody would say it has great potential for the future. And we never knew when the future would arrive. But honestly, the future has arrived in a big bang in the last 5-7 years, right? And COVID has accelerated it. So I think the entire supply chain, let's start with let's forget about home delivery and all the last mile, which is so well written about. Let's just ignore that for a second. But just look at opportunities which are even simpler. For example, if you look at the fact, like take an industry like say cement or an industry like steel, the amount of their revenue that goes into logistics expenditure is crazy, right? In cement, it's about 30%. Imagine now with all these trucks being digitized, the entire truck supply chain and drivers being digitized with platforms like Freight Tiger or platforms like Black Buck and so forth. The efficiency levels that is coming through is incredible. Take another example. Now, you saw Amazon's statement 2 days ago, right, about how many they want to say 10 million Indian micro and small businesses should participate on their platform is their dream, which means a complete digitization of the supply chain from these small individuals. How do they load their products into the e-com sites? How do they manage their inventory? How do they manage the delivery linkages, the payment linkages, right? So now like a infrastructure of logistics, which means how each of those consignments is getting moved is massive. That's another example. And we can go on, take our own investment in a company that rents pallets out so that you can rent a pallet to put in a truck and go from A to B. Today, pallet pooling in India, which is a good indicator of logistics efficiency, is 5%. It actually should be about 20 or 30% to know that logistics has become efficient. So that is the reason why India is spending such a large percentage of its GDP on logistics. I think last check was 12, 13, 14%. It should probably be in a single digit number. And that unleashing of the efficiency will actually bring down the logistics cost as well as improve experience, as well as reduce the lead time. So I think logistics deals, if you look at it in the last 6 months, have been flying off the shelf, right? You saw Express B's funding recently. One of the very good express logistics companies, Spot On, right in the middle of COVID crisis, actually had an up round. And our own company, Leap, which we have just invested in about a year and a half ago, is actually experiencing 2 up rounds in the market as we speak, potentially. So that is the reason. The whole transformation is now happening in logistics in a dramatic way, in every age of logistics. Adesh?
Yeah. Gopal, my next follow-up question perhaps would be about how does one go about understanding the pharma space? One, API is somewhere, a lot of changes are happening. B, there are changes happening in the US FDA market because of the need of the healthcare and other aspects. And C, there is an internal Indian market which is now growing. How are you visualizing your investments in this space?
Honestly, this is an out-of-portion question for me. I do not understand API. I do not understand the US market, FDA issues. All I see in the pharma space is a very limited last-mile issue. As you know, India has got a 1.5 lakh crore pharmacy market. This market has been attracting tremendous investments in e-pharma. We saw recently the merger of Midlife with Pharmeasy, 2 of the largest online companies. Our own last old business partner, MedPlus, which was a 2,500 crore pharmacy business with about 10 to 15% e-pharma, is going through dramatic transformation. You, of course, saw the biggest news of all, which is Reliance in JioMart buying NetMeds and basically trying to digitize the e-pharmacy space. And of course, you saw Amazon's announcements into coming into that space. There's rumors that the famous Indian business groups, also other business groups who are having ambitions in e-com want to come in. So I only see that space. That's a space with 1.5 lakh crore of business with nearly 8 lakh or more retailers. Clearly, tremendous amount of desire of the consumers wanting to get also their medicines at home, to be able to do comparison shopping for prices, because there's a wide variation in prices of pharmacy products across chains, across generic, branded and generics. I see that part is going through mega transformation. So I think one of the big stories of e-com for the next 1 or 2 years is actually going to be the e-pharma business. So that is all the part that I see, and I'm really very interested because, again, to answer your previous question, this will mean consolidation into larger players. This will mean weeding out of inefficiencies in the supply chain, especially when it comes to the distributor and the small retailer. There is going to be huge change, and Prime Minister Modi's vision of getting more generics actually is going to become real because of this particular initiative. When people start doing comparison of medicine prices, which will be enabled by has been enabled by the e-pharma system. So that part is the big next step. You saw restaurants, you saw e-com, you saw basically single tasks being done by people like Swiggy's and Dunzo. And now I think you're going to see the big revolution is the 1.5 lakh crore pharmacy business being transformed.
Gopal, when I see a big PE player like Blackstone buying into real estate, and now if I add up all the real estate they own, they perhaps are one of the largest owners of real estate, commercial real estate in India. Would you be thinking on those lines? Because while it's good to talk about technology and future businesses, the importance of real estate and other hard assets will always remain. I mean, real estate will always have a terminal value. There is distress in real estate. There is a lot of distress in commercial real estate. A lot of people say, okay, we'll not go back to offices. But once vaccine comes in, things will improve. Would you be looking at real estate, commercial aspects, companies which have hard assets to offer, which are trading now cheap?
First of all, let me convey my apologies, Nikunj. I just addressed the name on the screen and I wasn't briefed as to your exact name. So let me first correct myself. Sorry about that. I think, just to correct one more thing, Blackstone is, my understanding, the largest owner of real estate in the country, not one of the largest, as per one of their press statements a few months ago. Don't understand real estate. We don't do real estate at all. All I would say is that fundamentally work from home will just become one more aspect of business. I really think people will get back to offices pretty fast. 90% of Oxford effectiveness is great news of this morning. It's also not, it is not 60% as originally reported. So I expect by June, July, summer, everything will be back to normal. Offices will be back again full. Yeah, people might still now may use what they call the 20% rule, right? Which is, I need 20% less real estate because one day at least I'm going to let people work from home. Some people are saying 40, some people are saying 60. But I think the number will settle around 20% maximum in large business process management kind of environments, or maybe in IT coding environments. So I don't have much more idea about real estate, other than the fact that generally speaking, residential real estate is overpriced in most of India. When you have a 3% rent yield and then you have REITs doing 8 or 9% yields, clearly there's a message that there's a tremendous opportunity to drop prices in real estate across many of the metropolitan areas for residential. Nikunj?
Yes, Gopal, this is Aabha also joining in. I was curious in terms of the kind of potential you see for us to see more IPOs and listed players now going forward. The speed of companies in India or startups emerging as unicorns has only increased. I think as per the last NASSCOM estimates, they were expected to be 100, 200 in the next few years, much faster than the first 20 we've seen in the last few years. And, a couple of key companies that have already been talked about, including the likes of Nykaa, that could be getting ready for an IPO, soon. In terms of the speed of exits, the size of the opportunity that you see in some of these digitally led players going forward, I just wanted to get a little deeper into that with you, because until now, we haven't managed to see that kind of success on the exit front when it comes to, many of the tech-led startups.
I keep one. Oops. Sorry, I thought, am I still there? I got an error message on my screen. Okay.
Yes, absolutely. Absolutely.
Yeah.
Please go ahead.
Error messaging, I was signed out. No, I think it's an interesting question to ask, right? We have a conversation in the newspapers and various webinars that are going on as to whether Indian companies should be permitted to list abroad, A. B, whether they should be permitted to list abroad without listing in India ever, B, right? And the argument given is twofold. One is that large venture capital funds like Sequoia want to get better value, which is a very fair thing if you ask me, and hence listing abroad gets better valuation, that you can get a NASDAQ listing at 20, 30 times revenue, and therefore you want to list it abroad. And second, they can't get the same listings done in India for two reasons. One is the protection of retail investor, which is SEBI's primary job, making them deny permission to companies which are EBITDA negative to actually list. So I think more than ask the IPO question, I would ask the fundamental question saying, is SEBI transforming its IPO rules? Is that the last bastion that the startups are yet to conquer? They've conquered the hearts of Prime Minister Modi. They've conquered the DPIIT's policy making and having a ministry to look after startups. They've conquered the heart of venture funds by creating a fund of funds for startups, several fund of funds for startups. There is a talk of the government now announcing that EPFO, NPS money will be allowed to put into a fund of funds for startups. But SEBI still is yet to think about allowing companies which are fast growth, tech driven, but still EBITDA negative companies to actually list. We're all celebrating Moderna, isn't it? And remember, Moderna practically has no revenue. It's been only losing money all its life, but it's a listed company. I traded Moderna stock in the pandemic and made money. So fundamentally, I think that to me is the biggest question for Indians. And when the time of atmanirbharta, which is so correctly being made as a policy plank, it is very, very important that we start letting startups getting listed without putting EBITDA positive for 3 years or whatever is the current criteria, something like that. And basically ask the question saying, should there be basically a ring-fenced sandbox in which startups should be allowed to be listed in India? Bring in, for many years in SEBI, we've been from the industry recommending this concept of an accredited investor, somebody who's got a gross taxable income of more than 50 lakhs or 100 lakhs for 3 years in a row. Let those people participate. Let these startups list in India. This absolutely startup listing is mandatory. I mean, during the pandemic, if you've been following the number of IPOs, right, in the US, startup IPOs, one after the other, just coming again and again and again. Next one is going to be Airbnb, which we're also familiar with. And I went through the S1 of Airbnb, the equivalent of DRHP, right? And if you look at it, I mean, those kind of companies are there in India, but they cannot list in India. We should get SEBI policy amendments for Nykaa's, which is, I think, a profitable company in this particular case. But there are many which are yet to be profitable. And I think that is the biggest policy challenge, if I had to articulate my opinion on the subject. Allow high growth startups for minimum size, maybe 500 crores or 1,000 crore revenue. Let them list in India, even if they don't have EBITDA, and allow a set of investors who can take financial risk, let's say more than 1 crore rupees gross taxable income or 50 lakhs gross taxable income. Let them be allowed to participate. Let mutual funds be allowed to participate. That would be my ask, actually, to solve the problems. We must see 100, 200, whatever number of unicorns. And they must be listed here. And we must open the door for them.
Absolutely. Great, great takeaway there, Gopal, and thank you so much for joining us. Appreciate the minor technical glitches which are always a little disconcerting. But thank you for your patience and great to have you with us on ET Now.
Thank you, Ada. Thank you, Nikunj. Bye.